Welcome to Fintech for Financial Inclusion, Empowering the Unbanked and Underbanked, a webinar moderated by Dr. Kelly Carter, an Associate Professor of Accounting at Morgan State University. This webinar will explore innovative fintech solutions bridging gaps in financial access. The panel will discuss how technology transforms banking for marginalized communities, fostering economic empowerment and inclusion. Please join me in welcoming Mr. Afolabi Ogunnaike and Ms. Marcarena Valdez. Afolabi Ogunnaike is the Director of Strategic Initiatives at Cross River. He leads teams to execute enterprise-wide projects that enhance the bank's performance. He previously was part of the business strategy and operations team focused on building a suite of digital asset products. Earlier in his career, Afolabi held strategy roles at McKinsey & Company and USAA. He started his career as a chemical engineer and holds degrees from Cornell University and the University of Texas at Austin. Ms. Marcarena Valdez is Senior Business Development Lead for Cards and Accounts at Cross River. Macarena began her Cross River journey in March 2022 and has been instrumental in leading all business development efforts for card issuing and deposit accounts. Prior to joining Cross River, Macarena was at TMX Finance, where she held positions from General Manager to District Director of Operations. At Cross River, Macarena played a pivotal role as the business development lead on the development of a secured card design to assist cardholders in building credit. Additionally, Macarena led relationship sales training and product sales enablement for her region at TMX Finance and is an alumni of Our Lady of the Lake University. Without further delay, Mr. Afolabi and Ms. Macarena, please take it away. Thank you.
Thank you so much. It's a pleasure to be with you all today. I'm calling in from New Jersey, and it's, again, wonderful to be with you today. So Macarena and I are going to start up the conversation with just a high-level view of the state of financial inclusion today, and then we'll hand over to Dr. Carter to lead us through a conversation. So the first thing I wanted to do was just start up with a question. How many people in the US do you think are currently unbanked? So please indicate your response in the pop-up to just show it up. Options, the four options: 2 million people, 5 million people, 15 million people, 25 million people. How many people do you think are unbanked in the US? Let's just pause. Give it like 5-10 seconds before we close and see what the response is. But for me, I thought the answer was surprising. So, okay, can we close the poll now? And let's see what the results look like. Let's see. I'm not seeing the results, but
10% of people said 2 million people, 41% of people said 5 million people, 39% said 15 million people, and 12% said 25 million people.
Got it. That's great. So majority was incorrect this time. The answer is around 15 million people, although that's around 5 million households. So I was surprised because I thought the answer would be much smaller, but it just goes to show the extent of the challenges facing the unbanked, how large the problem is. Okay, Matt, could you please go to the next slide, please? So before we go further, we just wanted to also just define a few key terms: unbanked, underbanked, and then the alternative financial services. So unbanked, by unbanked, we're really talking about individuals and households where no one has access to a checking or savings account. The good news is that in recent times, over the last 10 years, that number has gone down substantially in the US. So, back in 2011, we had 10.9 million households that were unbanked in the US. And the FDIC's most recent data in 2021 shows that it's only 5.4% of America is unbanked, down to 5.9 million people. It's still too big, but at least the trend is in the right direction. So that's unbanked. And then for underbanked, we're seeing underbanked people are people who have access to checking and savings accounts. However, they also use some of these alternative financial services. That these include things like check cashing companies, payday lenders, and again, so they have some checking accounts, but they're not using the full penetration of the suites of services that banks do offer. Again, it's a good news story. The number has come down over time. Currently, according to the FDIC, 14.1% currently is of the US population is underbanked. But this is down over the past 4 years from 18.7%. So that's a good news story. And then the last piece is just digging deeper into these alternative financial services. The reason why they're often being called out is they sometimes have been accused of really predatory lending, if you will, really high interest rates. And again, the trend is coming down. From 2017 to 2021, the share of Americans who are using these alternative financial services reduced 50% from 6.4% in 2017 down to 3.2% in 2021. So that's just giving you let's just level set on the definition of these key terms that we'll be referring to during our conversation. Yeah. Okay. And then I think we have one more. And one more, just pulling that thread a little bit more as well. One of the things we found that was really interesting is that the use of these alternative financial services does vary across the US. We can see it's deepest in the South, less use across the West Coast, less in the Northeast, but primarily the South, where we see, the number of people, the share of people who are using these alternative financial services at least, 5.7 times, so percent in this region. So that's some background, just to level set the conversation. And Dr. Carter, over to you.
Okay, well, thank you so much again for joining us, Mr. Afolabi Ogunnaike and Ms. Marcarena Valdez from Cross River. On behalf of all the folks on the session today, welcome. And I don't know how to make the hands up at the top clap, but thank you so much for both of your joining. I'm not quite that technologically advanced. So let's go ahead and jump into.
There you go.
I'm sorry, I didn't hear you.
There you go. We have a few hands coming up.
Awesome, great. Oh, there we go. There we go. Yeah, I need to learn how to do that. Okay, let's go ahead and begin a discussion, if we may. You both have discussed your backgrounds, your professional backgrounds, but can you describe how your backgrounds have contributed to your work in financial inclusion?
Yeah, absolutely. I'll take that first if you don't mind, Afo. So Marcarena Valdez, you guys can all call me Mac. Definitely would be easier to get through this conversation with my nickname Mac. What I'd like to share is that my background prior to joining Cross River, I worked for a financial company that offered collateral-backed loans. And the target market was definitely consumers who had thin credit files or no credit files. Consumers who do not have access to the traditional credit or don't believe that they do. And I worked with that company for almost about 10 years, essentially training our sales organization on how these financial products worked. And what I came to learn through my career there and my experience is that the type of consumers that are walking into these stores and locations for these collateral-backed loans are there for a few reasons. One reason is obviously a need. There's an immediate need that they need access to a credit line or cash that they don't have access to today. They have a paycheck that's a few weeks away, and they have an emergency that's happened and they need these funds. So there's a need. But secondly is that these consumers are also recurring customers of ours, and they come back every time that they have a need that comes up and keep using our services. And what I found is that many consumers were not prepared with emergency savings to keep them from needing these services. That was a common theme. Secondly, it was customers who felt more comfortable coming back to our locations because they knew the people at these counters, at these desks who were interacting with them, who were educating them on how these loan products work, who were interested in finding out why they were in the situation they were in. And then thirdly, we're there to solution and help them find a way to meet their needs and take care of that emergency. And so over time, they built a relationship with people in these offices and stores. And what I gathered from that is the immediate need, but secondly, pairing that with a relationship that they've built, is that they became to trust the people that they were interacting with within these organizations. They weren't necessarily walking into, company name on the sign of the building. They were coming in here to interact with Marcarena Valdez or Afolabi as an example. And what that also, had me learn about this consumer is that they were just looking to walk into a place that they could trust, that they could feel heard, and that they were going to walk out actually having a solution for their problem. And a lot of the times they felt where if they walked into a traditional legacy bank, as an example, that they might, if they had the courage to walk in, they weren't sure what they were going to necessarily sign up for. They didn't trust that they were going to learn what they were going to be signing up for, or three, that they were even going to be approved. Many times these consumers were not used to hearing you are approved. And so that's why a lot of these solutions were leveraged, and that's what they were using, because this is what they were used to in that type of environment, in that type of community experience that they were seeing. Where that bridges the gap into, I've come into Cross River. In my role, I interact with a lot of fintechs that have a lot of ideas of how am I going to digitize this financial product. Maybe it's a traditional product that everybody has come to know, but how is this going to be a fintech version of this? And what I have also come to see within Cross River is that the types of companies that are coming in and being successful are not only trying to be on the digital forefront and having cutting edge technology, but are looking to disrupt those traditional means of credit or banking access, and offering things that are more accessible by offering cheaper rates, by offering less fees, and by offering terms and conditions that are very simple and transparent that anybody can understand. And so you understand and have a good idea of what you're getting into and what you're signing up for. Sorry, next.
Oh, no, you're fine. You're fine, yes.
Oh, I was gonna, thanks, Mac. For me, you can call me Afo as well. You can tell from my name, I'm born in Nigeria. So this topic is pretty personal, right? I mean, in the US, we said around 15 million people are unbanked, but the number globally is around 1.7 billion people. And for me, being born in Nigeria, I saw just a different, when I moved here, my eyes were just open because we didn't have much access to credit in Nigeria, right? It's just standard. And why is this important? Access to financial services can really enable people to realize the human potential, This is a great time to be alive. And however, I feel like there are certain segments of population that are not really able to fully appreciate and utilize this amazing time to be alive. And this is why this work is so important, is that who knows, we may have, the future Albert Einstein, the future Marie Curie, people who could help solve the ills of our society today, whether it's working on cancer research or Alzheimer's, all these things. And the fact that if they are in households that are not included in the financial system, that kind of compromises their ability to realize the human potential. And we, as society, we suffer from that. So this is really important work. It's really important conversation with real implications. Yeah.
Absolutely. Given my background, it's pretty personal to me as well. Believe me, I can tell you. So, so thank you to both of you for coming. We've discussed trends and kind of that you've seen, you've seen some of the unbanking numbers come down and things like that, which is great. We want to see that the number of unbanked and underbanked people continue to go down. And thank you to both of you for your work in that regard. Let's shift focus to demographics. We've talked about the millions of people in the United States, the approximately 15 million, as you mentioned. Which demographics are most commonly unbanked or underbanked, and why do you believe that's the case?
Kelly, that's a great question, because although we've seen, like you said, our statistics are moving in the right direction, and there's been a big push for a lot of consumers signing up for banking and becoming banked when they weren't before. But our communities that are still greatly affected by this disparity anyway, is we still have high unbanked rates within lower income households, Black households, and Hispanic households. That disparity is present at every income level for both Black and Hispanic households. So as an example, among households with income between 30,000 and 50,000, 8% of households and 8.4% of Hispanic households are unbanked, compared to 1.7% of white households. You know, and if we peel that number even further back, the types of households that are also affected are less educated, they're working age households with disability, single mother households. These are all key things that affect our communities from being a minority community. And so this is still, you know, sometimes what I hear is, and I don't agree with this, but sometimes I hear is, do we even have an unbanked problem still? And although we are going in the right direction, and the white households are definitely the ones who are seeing the benefits of being banked now over the recent years, our minority communities are still greatly affected. And so that's something that we still need to solve for. And that's what I see at Cross River when I'm learning and talking to different fintechs of what they're looking to offer. There's a big push and a big focus on how do we communicate and convert people to a fintech platform to become a bank customer for the first time, or to use more bank services that you typically would not have used in the past or have access to today. How do we solve for that? And that's what we look to continue to support through all of our offerings.
Excellent.
Mhm.
Afo, would you like to add?
Oh no, I mean, I think Mac nailed it, right? We see big disparities on race, income, education, ability. The part that for me was my blind spot were really around the last two, the ability and education. You know, I think households that are headed by people with disabilities are 5 times as likely to be unbanked than households led by people without disabilities. And people often think disabilities are, you think physical limitations, but that's really, you think it actually is a much more expansive term. Includes people with significant, diagnosis with mental health, with some chronic diseases, people who are blind, people who are deaf. And so just thinking about inclusion, we have to be cognizant of how do we reach different populations that require a different approach to meet them.
Absolutely. Absolutely. Okay, now we've discussed up to this point the what. We have the what of the situation. What I'd like to do now is ask ask about the why. Why do these challenges exist? I mean, what what are the challenges that actually do exist to prevent the unbanked and underbanked populations from achieving traditional banking sources? And so why, we talked about the what, why does this exist now?
Yeah, I can definitely speak on that here. There are 3 top reasons that have been reported as to why we, and I'm going to say we because part of this community, why we don't enter into using traditional banking systems. One is cost. So there is a fear of overdraft fees. There are high costly monthly minimums or monthly minimum balance requirements. And so the main one driving common theme across all households who are still reported as unbanked or underbanked is cost. Second one is trust in the financial system, trust in our traditional financial banking systems. And the third one is privacy. I'd like to really hone in on the trust part of this because I feel that that covers both cost and privacy. So through my career and my experience at this collateral-backed loan company, what I saw, the type of customers that I saw come in and what their concerns were was just sharing that they were unsure of what they were signing up for. I need this money, but how much is that going to cost me? Does that mean I'm never going to be able to get out of this? How do I get out of this? And same goes for bank accounts. If I use my bank card, how do I know how much money is really in it? If I go swipe my card thinking there's money in there, how much is that going to cost me if somehow it was overdrawn? The timing of how long it takes for a deposit to clear. There's a lot of these different pain points that happen throughout all the different financial products of do I trust the organization or the person who is telling me about this financial product, that they're going to tell me things that I need to know about it, whether I know to ask it or not? And I feel very fortunate to be having this conversation here with Morgan State University, because I feel that how you bridge that gap. I have a personal story here. I'm a product of junior achievement in elementary school, and I'm a first-generation Mexican American. And I was the one who learned in elementary school how to write a check and how to balance a budget. And I went home and I taught my parents that. They hadn't learned that before. And they entered into getting to a bank account, not because 9-year-old Macarena taught them that. It took a lot of conversations and a lot of different people encouraging them to trust into the system and enter into the system, sometimes out of requirement that you need this so you can get the next thing, or you can access the next credit line that you may need to solve a certain need. And so the education piece here, I think, is what covers both cost, trust, and privacy. If you are engaging with a company or a person that is there transparently trying to educate you of how you can leverage a financial tool to solve your needs today and your needs for tomorrow, then you'll understand that if there are fees associated and costs may seem high, how you stay away from those and how you manage them, not that they're and how you can avoid them, essentially. The trust piece is you've been educated on how this works, and so you've learned how this is used. You've also been educated and taught about something that maybe you didn't know how to ask, and so you can leverage that in the future if you ever to find that need again. And in terms of privacy, I think that's important as well. I mean, a lot of us are in the click generation of, I want to sign up for an account and I just click all the boxes of terms and conditions and privacy policies and disclosures. And so who knows what people do with my information. But if that information is presented to me in some kind of clear fashion way of how my information is used, what that's leveraged for, and the control I have over that, I think that can bridge the gap over those three big pain points, which is why people don't enter into the financial system or use more of it, which is cost, trust, and privacy.
Yeah, I want to completely agree. Thanks, Mac. I think for trust, there are also other elements for certain communities, right? In the US, we're still dealing with the effects of redlining policies, particularly in the African American and Hispanic communities. And some of those policies, even in recent years, there have been a number of banks that have been fined significantly because they were found to have been discriminating based on race, the mortgage interest rates, right? And so when you see these stories and you hear these family stories from your parents, your grandparents, and then you open up the newspaper and you see, gosh, stuff is still happening today, that erodes the trust. And the Pew Research Center, they did a survey and they found that Americans' trust in banks is actually significantly lower. It's fallen over time, but it's actually much lower than it is for tech, right? And so that's why I think fintech is so exciting, because fintech can help bridge the gap of trust between the financial services and tech industry. So that's that on trust. Then in terms of access, the other two areas I want to go deeper on access. As we've been moving more online, we've seen that banks have been closing branches. It makes sense. But it's also important to note that branches do serve a purpose. Just seeing a bank branch can help people build trust in the institution of banking. People oftentimes can walk in somewhere and it helps make it real kind of tangible. And unfortunately, 80% of the bank closures in recent years have been in lower income and middle income neighborhoods.
Yeah.
These are the neighborhoods that actually where unbanked and underbanked need these services the most. And so right now we are seeing some mission-driven institutions trying to bridge that gap, but we're beginning to see banking deserts emerge. And that's a challenge with access. And furthermore, in access can also be literacy, right? I think about this stuff from a global perspective, where literacy is an issue, like in my home country, Nigeria, right? Certain parts of the country, literacy is can be a hurdle. But I was surprised to see that, like in the US, 20% of the country is not considered literate. I was like, wow. And so it just got you thinking about you entering into a bank and they want you to sign all these different forms. As Mac was saying, pages and pages of disclosures, and you can't really access it. And so maybe playing things out, maybe video, I don't know, but like there are some, we need to consider how do we reach the last mile and think about truly being inclusive for everyone. So those are my thoughts on that question.
Absolutely. You know, what your answer to that question, Afro, and thanks for both of you for your answers. Um, your answer made me about trust, made me come up with a follow-up question, and that is certainly there are many aspects to trust, but what about tangibility as a factor? You mentioned that people are more trusting in fintech than they are in actual banks. Why is that? And I'm kind of hypothesizing a bit. Could tangibility be at least one factor there? Because people can, for instance, people can well, my phone's in my bag, but people can pick up their iPhones. They can actually touch that. They
Yeah.
can go and maybe trade crypto, or they can kind of see what a blockchain. They can go see some data, or on an unsecured blockchain, whatever the case is. But a bank, I mean, while they see one, they can't go and actually touch it, take it with them, and get intimate with it. Do you think that could be a reason?
That's a really interesting question. I think the trust piece, you have to think about, you have to break it down further because it might vary based on demographics, right? So perhaps younger people who are unbanked and underbanked, they may have more comfort with the fintechs or using things like Apple Pay and the various fintech solutions because they're more technology forward. And the halo effect of everyone uses Google, right? So the halo effect of Google and tech can more easily be transferred to fintechs. But then banks, in some quarters, banks have a bad name.
They
And
do, yeah.
and so they're starting from a negative place as opposed to being neutral or having the halo effect. I do think that for banks, though, like that whole physicality of the bank serving in the community, and as Max said, people are able to form relationships with people who work in the bank. That can help build trust, right? If I know Mr. Lewis cares about me, Mr. Lewis won't hurt me, right? And banks being able to be involved in community, doing outreach, that can help reestablish and reassert some level of trust. But once it's broken, it's difficult. And I think I read about a church, I think it's in Mississippi. Mississippi has the highest rate of unbanked people in the country. I think it's about 11%. And I think there's a church that realized a lot of the members were struggling with payday loans and what have you. And so they actually put together a mechanism to enable the members of this church to take on some loans, less than $1,000, right? And so here is a church which has a high level of trust in that community, taking on this role of service of financial servicing. And I think that's what's really exciting trend going forward is how more and more non-banks are able to take on some bank-like services. And I think that whole level of trust is helps them reach more people and serve more people. So I think it's a good development.
Excellent.
And Afo, I'm really glad that you brought up that example from this church in Mississippi, because what I hear what I hear you say is that this is a trusted institution who saw a need and found a way to educate their community and to help them get themselves in a better position. And they knew how to communicate with that community. They knew the kind of messaging that would resonate with them, and they they lived that experience with them because they were enmeshed in that community. And I think that's where fintech is particularly well suited to address those challenges of financial inclusion within these communities, because the fintechs that are doing this right, what they have found to do is that they've been able to create a message and a story to a consumer and meet them where that consumer is today. How did you enter into using this fintech for whatever purpose? Was it because you started in the crypto/blockchain world and they knew that really well and got you engaged in that service? And then as you grew as a consumer and their company grew as a fintech, then more services were offered. Did you start off as just cross-border payments because you were having to send money overseas to where your community is originally from, and they were looking for a cost-effective way of doing that, or a more faster, convenient way of doing that than walking into a physical MoneyGram, as an example. And then once you've capitalized and captured that consumer and really gotten to know them, and you are uniquely leveraging yourself, you're uniquely positioning yourself to meet them where they are with the message and the types of services and features that are important to them for their needs and their experience. What I've also seen is, as I talk through, frankly, dozens of fintechs with new ideas a week here, is that the ones that are pairing this with educational resources, simple and clear terms and conditions of how their product works, features that resonate for the type of consumer that they are targeting, those are the ones that are really getting over that barrier and finding these consumers and getting them to adopt these financial products that can then eventually be used to accomplish any of the consumer's life goals.
Absolutely. Thank you both for your responses. You both mentioned trust, and then you both mentioned relationships. I mean, you know, we all know from our professional experiences, and I can certainly say as well, you know, before I became a professor, I was in the business world, and my first job in corporate America was as a consultant with one of the major firms. So I was one of Afo's competitors. He was at McKinsey. I was at a different one. I won't mention, but I'll say this, and as we all know, it's all about relationship. It's all about relationships. So for the students, particularly who are listening, not just in banking, but in everything, relationships play a key role. That's why professors and people you interview with and people on your internships will say network. Networking is, of course, performance is great too, but you have to network, so that way you have good relationships with people, and those people can speak well of you. Okay, which gets to treating people the right way as well, as I tell my students all the time.
Yeah,
So,
and well, what this network ends up doing, Mr. Carter, is that they end up being a resource,
absolutely,
educating you and expanding what you know and building off of what they know and creating better offerings, better solutions for all of the communities that we're trying to serve. Absolutely.
Absolutely, yeah. And I can tell you, the last time I went into a traditional brick and mortar bank, when this one particular branch I went into, the man said, you know, we're offering this investment product that I didn't even go in there for that. I went there for a different purpose. He just said, I'm looking at your balance here. We're offering this particular thing here. If you ever, this is what you would do, get whatever. If you ever decide to do that, come back, see me. I'll take care of you. So that relationship, like you said, I feel like going back to him. You see, whereas if I go into a place where I get a cold relationship, I don't feel like going back.
Right, exactly. At least that's your starting point too. They may not have exactly what you're looking for, but you're going to find out if they do, and then they might direct you to the right place if it's not theirs. But you trust that person that you've created that relationship with. Absolutely. I think that our consumer, and we're all consumers here, I think we are all in a very unique time where we are educated in the sense of what's out there in the market, and that we can also see when someone is being genuine about their purpose of creating a relationship with you and the messaging they have with you. And I think that's within the fintech industry, the fintechs that are successful not only are trying to create a story, but they believe in that story. They're part of that story. They're part of why they want a solution for this. And the ones that are being very successful are the ones that genuinely believe in that message and their mission. And that clearly comes across in the offerings that you see.
And I also think government has a role to play to ensure that, unscrupulous agents do not intentionally, willfully harm consumers, right? And so that's why we're very grateful that we have a robust financial regulatory system here and banking system here in the US, but it's not the case all around the world, right? So
absolutely. And here's what we've got about 25 or so minutes roughly left. This next question can actually cover a lot of different things. I'll leave it very broad so both of you can do so, and then we can have time hopefully to get to some of the questions in the chat, and if we finish those up, we can come back to a few others. But we've looked at the what, we've looked at the why. Now let's look at the move forward. We've been talking about fintech as solutions. For the students on the call, fintech is nothing. It's really nothing new. It's been around for decades. Obviously, it's just the term fintech is new, or relatively new. And if you follow the financial markets, which I as a financial professor do all the time, we've been hearing kind of the latest innovation, AI, and of course, NVIDIA's earnings are coming out later today. So please be, attuned to that. To that announcement. But how can fintech in general, whether it's AI, whether it's mobile money platforms, blockchain, crypto, all the things we've heard, how can all of those things help to increase access to banking solutions for those who are currently unbanked and underbanked? Afo, I'd like to start with you, and then Mac, if you could come after Afo.
Got it. Okay, so how can fintech? So I think the first things first is, what exactly are the problems that we have today? The problems that are preventing people from participating in the banking system today include, number one, trust. It includes high fees, includes high friction, and then we'll talk about access, right? So those are the four main categories of problems. And for me, I take a very product-led view in trying to figure out these, fintech, technology, AI, all of these things are just tools. We need to be very clear on what the problem is, and then figure out, does this tool fix that problem or not, right? And otherwise, you find yourself in a situation where you have a solution looking for a problem. So that's my perspective, is be very clear on what is the problem facing the consumer, and then find the tool to help, hammer that nail in. For me, I think fintech clearly provides a lot of, in terms of access, fintech does a great job there in expanding access, right? I think tools like mobile money have been really instrumental. Places in the developing world, M-Pesa obviously is an example everyone uses in Kenya, where prior to the use of M-Pesa's mobile money platform, only 25% of people in Kenya had access to financial system. Today, M-Pesa helps push it up to north of 70%. I mean, it's been an incredible shift that other countries have tried to replicate, and they've not done so quite to the same extent, but it just shows the power of designing a solution with the customer in mind. I think crypto, there's a lot of promise and chat around how crypto can be used to increase financial inclusion. To me, honestly, the jury's still out there. I think there are some clear areas, specifically around payments, right? I mentioned I'm originally from Nigeria. According to the World Bank, Africa has by far the highest remittance fees, on average about 8%. That's really, really high. So if you imagine someone who's sending $100 every month to their family, that means they spend $100 of fees every year. That's ridiculous. And so there's some promise using stable coins, people using some crypto to do some money. I prefer stable coins because the value is stable. Crypto is highly volatile, so use at your own risk. But there is some promise over there about how can we reach people. The other thing that's also interesting as well is, like with crypto, people have wallets, right? And one of the issues we have with the current system, particularly with those with lower incomes, 20% of the people who are earning $15,000 or less a year in the US are unbanked. And you start thinking about that, it's because of the high fees, right? Let's say you get paid on a weekly basis, you get paid on a Friday, and then the bank's going to charge you high cost, high fee if you don't maintain a minimum balance. That's number one issue. Number two issue is the bank might have a delay. So you deposit money on Friday, maybe you can actually access that money until Monday or Tuesday or Wednesday, right? That's also a problem. And so with crypto, we have your wallets. You can't, you get, right, once you have your stable coins or your crypto, your digital assets in your wallet, they're yours. You can do something with them immediately, right? So that latency is gone. That's a good thing, right? Also, there's no minimum fee balance, right? So that's also a good thing. And then the third thing is, I lost my train of thought. But to be clear though, these solutions don't have to be solved by crypto. There are some fintech and neobanks who are also addressing some of those issues with a different solution. So I'm just giving you a quick overview of how I think about it. But I do believe that how can we get to the last 5% that is still outstanding? It's going to be access using technology, and you have to find the right tool to go after the nut you're trying to crack.
Absolutely. Absolutely. Mac?
Yeah, actually, I want to jump into like probably a couple examples of what we would call success stories. What couple of fintechs that I've worked with here at Cross River have been able to bridge that gap, have been able to create that financial inclusion. I have two programs that come to mind. One program is this company called Current, and they offer a secured credit card. I was part of the solutioning that kind of use case and program and secured credit card program that they offer in the market today. And that secured credit card program, what is a graduation from their original product. Their original product is a checking account, a savings pod, debit card. And now they're graduating the consumer. They've captured them. They have an understanding of who this customer is. The customer trusts using their payment rails, like what Afa was just describing, their banking solutions or saving solutions. And now it's, how do I build credit now? And so they came to us to offer this secured credit card program. And because of the way that they've positioned this card, they've been able, this has been a program that has some of the highest adoption rates I've seen across credit card programs, at least for initial programs and new programs being offered to the consumer base. And that secured credit card program is responsible for building the credit of consumers because of their repayment history. The other program that has been a really success story for us as well at Cross River is this other company called Yendo. And they offer an asset-backed credit card. And you've heard of different kinds of credit cards. There are charge cards where you pay off the balance in 30 days, revolving where you can make a minimum payment or pay off the balance. The secured card, like the one I just described for Current, where you have funds that are deposited, that are secured, that gives you that credit line based on how much you have deposited away. And this asset-backed card is offering a credit line to a consumer based on the value of an asset that's not necessarily cash. And that asset is actually a car, the ownership of their vehicle. And that has given someone access to a credit line that they typically would not have access to because it's not necessarily income-based. It's based on the value of that vehicle that they own, and at rates that are within what credit card offerings can be, and not at the significant predatory lending rates that are out there that you would traditionally find. And so, you know, those are two programs that are out there doing it, leveraging a fintech solution and offering what you would typically have called a traditional credit card model, but they are fintechanizing that by putting it in this digital format, by making it either secured for Current or collateral backed or asset backed for the credit card for Yendo.
Excellent. Excellent. Wow. Asset-backed credit card based on the value of a car. That is innovative. I had never heard of that.
Yep.
That's really something. And then fintechanizing. Okay, that's a new one. I haven't heard that.
Made
That's
that
a new
up on
one.
the fly. I know you'd like
Exactly. That's a new one. And for all the folks on the call, you see all the innovation that's coming up right here on the call. So, okay. So, hey, Miss Tanisha, can we go to some of the questions in the chat, or?
Yes, select the Q&A button at the bottom.
Okay, great. One question is, will the folks in attendance receive copies of these slides that you both presented at the beginning?
Yes, we can share them.
Wonderful.
And you guys could also find a lot of the stats that we discussed on the call today was based off of a survey that the FDIC does on a yearly basis. The information we shared today was based off of their 2021 survey. That was the most recently announced one. But we can share those with you guys.
Excellent. There's another question. To what extent is the issue of does the issue of trust contribute to unbanked and underbanked cases in the USA? We kind of discussed trust. That was a great question. That one's already been answered. Sort of off topic, but still related. What resources do you recommend to Gen Z on buying a home?
Ooh, on buying a home. Okay.
I would say that I actually give my children this answer a lot, which is, and I'm going to give you more context for this, so please forgive me for my one short answer, which is Google it. But honestly, nowadays we have access to so many resources online that there are lots of different websites that let you compare rates, that let you compare the offerings, let you compare what is the right customer profile look like for the kind of rate that you're looking for? What are the things I have to do to qualify for a certain mortgage rate that I'd like? What are the considerations of that credit profile? And all of that can be easily found online through a lot of different resources. And I think the key there is compare everyone's answers together and find what works for you, and find what resonates with you in the way that you want to, you want to digest that.
I'll add a few things to that. My first question is, like, I would ask why. Be very clear about why you want to buy a home. The second thing I would then say is do your research, because one of the biggest things is a lot of people just focus in on the payment of the mortgage, and they don't fully appreciate all the other costs that come along with that, whether it's HOA fees, whether it's maintenance fees, your utilities are going to be higher. So talk to people, do your research, and truly understand the full cost of home ownership. And it's likely higher than just the mortgage payment, right? And taxes. Taxes are things, depending on where you live. And the third thing is there are a bunch of resources there on personal financial planning. I'm not trying to plug anyone, but there is a guy on Netflix who I enjoy watching. He has a YouTube channel as well on personal finance, called Your Rich Life. I'll teach you to be rich. So he has a bunch of resources available on just like personal finance management. And that's can be very helpful for people.
Excellent. Okay, here's a question. How do you all at Cross River offer your program? Is it directly through you, or do you partner with banks? And what are the requirements? Is it credit score or something else?
Sure, let me take that. So Cross River, we are a fintech bank, meaning that we are a bank. We have a New Jersey state chartered license to be a bank, but we don't target consumers directly or end users directly. We offer our services through fintechs that want to offer this in the market. And that's how we can leverage, a larger audience, reaching different types of communities and different customer bases through these fintechs. So we power fintechs so they can offer these financial services. And we essentially have oversight and review and approve their entire end-to-end process of what a customer interacts with, so we can ensure that that program and that banking product and service that they're offering is compliant in all ways.
Okay. Afo, would you like to add, or?
Oh, she got it.
Awesome. Awesome.
The sales girl got it.
That's great. Here's the nail, and there's the hair. Boom, she hit it dead on the head. There we go. Excellent. Let's see. I'll handle these two questions at the same time. No, first question is how does one get started in fintech?
Mhm.
And what happens if we switch to a completely cashless society?
Ooh.
Mhm. Can I tackle the second part of that question first, and then Afo, I can let you have the
Please.
first part? So what
Please,
happens
yes.
if we switch to a completely cashless society? One is, I think we're almost there. And the reason I say that is because a lot of the stats that we went over in today's meeting about the increase in people adopting bank accounts and that number decreasing of the underbanked and unbanked was driven a lot during the COVID era of people having to go digital. If you remember during those times, we couldn't if we were allowed to go into a store to purchase anything, they weren't accepting cash. It had to be a card
right.
because of the concerns of COVID. A lot of the physical checks that people were getting had to be transformed into electronic direct deposit instead. The government made a big push on a lot of government benefits to be moved to receiving direct deposit for these government benefits, meaning electronically being deposited instead of a physical check being mailed to people's homes. And so there's a lot of things that were at play that created that move in the right direction of people being banked that weren't previously being banked. And I just think that as long as we continue to offer more fast, convenient, and less expensive ways to interact with our financial system, the more we're going to be moving towards that cashless society.
Mm-hmm.
So personally, I don't really carry cash at all. But previous job, like I did payment product strategy, and I was over ATMs, checks, wires, and emerging technologies for payments. And I was very surprised by how resilient the use of cash and checks have been in the US. And it's certain demographics that use them. So other thing is like for cash transaction, if we did move to a cashless society, it would actually wouldn't be inclusive. There are people who just like the feel of cash. There are people because of the trust issues, they don't use bank accounts. They like the feel of cash. But also, you got to think about what kind of transactions are people using with cash, and it's often things which they don't want a record for. And this is human behavior. So human behavior has not evolved over millennia, some of these things. And so therefore, like, I don't know. So I think there may still be a little bit of that cash usage still, because unless there's another way for people to transact. But for privacy reasons, I think cash may still be resilient. But who knows? Maybe our kids or grandkids will live in a world where there are flying cars and no cash exists.
Flying cars. That'll be interesting. Just like they have lanes up there for airplanes, will they have lanes down here, or kind of down here, meaning not on the ground, but close enough for cars? That'll be interesting. That'd be really interesting.
But to answer your second, the first question was, how do you get into fintech? This is super important. Technology is increasingly shaping the world, right? Across all spheres. And it's really important that the consumers of technology are also, that demographic is representative in the people who actually develop in technology. I'll give an example with AI. There were some AI models made that were using facial recognition to identify people who have committed crimes. And there was this case recently where the developers of that team, none of the people there were of Black descent. And so for whatever reason, the tools that they used to feed the AI model was just not very diverse. And so the effect was that they didn't capture the unique kind of features. And so they mistaked people. Some guy was arrested who was completely innocent. He was arrested for a crime he didn't commit. That's an extreme example. But I do think it's so important that we have people, the people who are developing technology should look like the people who are actually going to be using it, because everyone adds something special to the equation. and you catch things that other people might just miss. You bring in your own cultural context, you bring in solutions to problems, local problems that people may not think about. So that's why I think it's super important. How do you get into fintech? You know, fintech's a big field. It includes everyone from the big boys like Visa and MasterCard. They're fintech companies, all the way through companies like PayPal and Cash App, which owned by Block, and companies like ours, right? So there are many, many companies out there. I would say is just I would say a couple of things. Figure out your skill set. And we need people from all different backgrounds, whether it's accounting, HR, we need all backgrounds. And then, of course, product managers as well and salespeople. But then figure out your skill set and then be excellent at what you do and go after these companies. I think it's really important. It's really helpful for me to connect with other people. And sometimes they can help you understand, refer you to jobs. They could also give you additional insights into where it's growing, hot areas to consider that could help you inform your job search. So I think just build relationships it's really how I would recommend. Reach out to people on LinkedIn who are working in jobs you want, and just say hey, if you're a student, say, hey, I'm a student, can I have 15 minutes with you? I want to love to learn more about your job and your industry. And you'll be surprised by how many people will say yes. So that's what I would say to someone interested in joining fintech.
Absolutely. Really good advice. We've got only a few minutes left, and I'm going to try to condense about 15 questions into 2.
Okay.
And the first one is, we're talking about the explosion of fintech and how that can help reach unbanked and underbanked populations. Do you think that a lot of this explosion is happening because fintech is kind of trendy? It's kind of the latest thing now. It's also transparent in relation to cost, and is that going to be sustainable over the long run? That's the first of the last 2 questions.
Yeah, I'd love to take that. So trendy has this connotation of that it's hot now and it's going to go away. So fintech isn't going to go anywhere. You know, I loved Dr. Carter that you mentioned that fintech is a new terminology that we're using, but the actual industry and how it's being provided has been around for decades, right? I have great mentors in this industry, and when I used to introduce them, I'd say they were in fintech before it was cool to say it was fintech.
Yep.
And it's a marriage of financial products with technology to make it scalable, cost efficient, and more approachable and inclusive for more people. And so I don't think that this is trendy necessarily. I do think that our consumers are more comfortable with using technology, and that we used to be households of maybe, if you were middle class or affluent, had one computer in the household for the entire family, versus now everybody has a device. And if you don't have a device, you have a phone. But I did see a question come through, and I think this is kind of where you were going towards, is in underserved areas that do not have access to technology or to high-speed internet, that is essentially a requirement to be able to live online and run your life online. Can that be a gap? It absolutely is. And I think that goes hand in hand with education. I think that goes hand in hand with providing resources, and our government is looking to offer those kinds of communities access to internet or devices through several different types of programs. And I don't think fintech is the one solution for bridging that gap to the underbanked and underserved or unbanked. It's pairing all of these different solutions from the government, from financial institutions, from businesses, all combined together, trying to, provide a solution for the consumer. And in terms of, why is fintech probably more adept at addressing inclusion, is definitely because of the transparency piece. You are interacting with this company /web/app just online without necessarily a physical person. So you have to be engaged with that message, and you have to build trust through that. So you have to be transparent with how you're interacting and what you have offering, because that's the only way you communicate with that end user. So yeah.
Excellent. Thanks, Mac. Afo?
Yeah, I think to your point, I think fintech has been around for a long time. Everyone takes debit cards for granted today, but that's a fintech innovation in the 70s, right?
Sure is.
So, it's not just something crypto, and it takes a long time to develop these things, but they do become so normalized that we take them for granted and forget they're actually fintech. That's number one. Number two, I do think Mac made a great point about technology gaps can, become a hurdle for some people to access these innovations. And that becomes a wonderful problem area for some people in fintech to address. There are like the whole mobile money thing, for example, right? In Kenya, M-Pesa, people are using basic phones. These are not necessarily iPhones. These are low-cost phones that have been enabled to transfer money and serve as a store of value. So that's an innovation. That's a problem to be solved. I know Visa, the company, has also been working on building low-cost applications that can enable people to transact using stable coins without necessarily having a phone that has internet 24/7. That's something that they're developing. And the third point with me is I think what's really exciting is how other companies in tech in general are now taking on fintech and financial service capabilities. One of them I'm super excited about is WhatsApp. So WhatsApp is huge, right? Billions of people use WhatsApp around the world for telecommunication, right? I can talk to my grandma in Nigeria using WhatsApp, or my cousins, wherever they may be, using WhatsApp, can do video calls. And WhatsApp is now adding in the ability to send money and pay using that platform. It's not live in the US yet, but more and more we're going to start seeing companies and tech products which we are using for other purposes are now taking on financial services like products. And so that could also help us reach people who may not necessarily be down to download the latest app. Is meet people where they are already.
Understand. And the final question is kind of an educational question. What financial education resources do you recommend for folks to access if they want to read up more on fintech, blockchain, et cetera?
I know both of us are like, So based on the kind of conversations I have with fintechs, a lot of the resources that we rely on is your idea compliant? Or your idea and the customer experience you want to deliver, how do we ensure that we are compliant? So I rely a lot on the resources of both the CFPB and the FDIC to look up the regulatory guardrails around what we're trying to do as just kind of like a guiding post line of where we are.
For me, I would bucket it as I think you need to understand history, and then you need to know what's happening today and in the future. So for history, I recommend reading books, right? There's a great book on the origin of Visa and the credit cards. I referenced this a couple of times in our conversation today. I forget the name, but it's out there. I would just read that to understand, here's the origin. Here's how we all got debit cards in our pockets, debit cards and credit cards. It's an interesting story of innovation. And then in terms of what's happening today and in the future, I find Twitter to be a great resource, LinkedIn, YouTube, and of course, there are articles, right? But Twitter, if you have an interest, let's say in crypto or in payments, just find some influencers, find a couple, and just follow them. And then you see something you don't understand, you go find a YouTube video, watch it. It's easy to learn today. If you don't know, you should be able to find out what you don't know. And and it's also helpful to then reach out to people just to chat about something. For me personally, when I was first getting interested in crypto, I started writing about it. Writing forces you to really understand what you're reading. If you can explain it to
Yes, it does.
8th grader, that
Yes.
means you really understand it really well. And so writing helps you to clarify your thoughts. And so I had a newsletter I would publish on a weekly basis. It forced me to read, and it forced me to understand, and it forced me to communicate clearly. So it was something I forced myself to do, but it pushed my understanding so much further. And if you're looking to enter the industry, it's a wonderful artifact to show to a prospective employer, and they'll say, wow, this person's really serious, right? they have taken upon themselves, they are driven, and they are truly interested, and then you'll be more effective in your role. So that's kind of, the approach I would take. It depends how bad you want to learn and how disciplined you want to be about it.
Yeah. There's a really great book out there called The Anatomy of the Swipe. And that really walks you through the history of like, from what does it take when you swipe your card and who are all the players involved in that?
Yeah.
And that's a really great resource.
Yeah, I've never read that
The
book.
Anatomy of the Swipe.
Yeah, but I've never even heard of it. That's a good one. Yeah, but you're right. So many people get a cut of every swipe that goes through. It's I've written a
Yeah.
book chapter on it, and what you said made me think, so many people get a cut. Just very, very, very briefly, someone mentioned, can you touch on blockchain in 15 seconds each?
Ooh.
Just a brief overview of what the blockchain is.
I guess I could start. So blockchain itself is a technology. Think of it as like a ledger, a digital ledger to help you track data, essentially. And it can be used in different industries. It can be used in financial services. It can be used in supply chain. One example I like to give with blockchain is in a luxury industry, right? We have massive amounts of fake goods. So people with like fake Louis Vuitton bags, for example. This is a problem for the manufacturers of these goods. So with a blockchain solution, you're able to, number one, track the leather that's used in the bag from the source, from the very cow that got skinned, right, all the way through manufacturing into the bag. Furthermore, you're able to then put that, verify that actually this bag is authentic using the ledger system that the blockchain does provide. And there are also analogies, there are also use cases in financial services as well, where you're able to understand full ledger. I can then transfer funds much easier. So that's a very high level. I would recommend, for a better, more deep view, I recommend just going on YouTube. There are tons of videos that do explain blockchain to me as if I'm 5, or just furthermore, I will go on like ChatGPT or Gemini, explain blockchain to me as if I was 8 years old, and you'll get you get a response, and then that's what I would do.
I couldn't have said it any better.
Excellent. Well, listen, thank you so much to Ms. Marcarena Valdez and Mr. Afolabi Ogunnaike. Again, I don't know how to do the hand claps, but I'll do a hand clap. If someone who knows how to do that, send them up again. That'll be wonderful. Thank you to both of you for your time. There we are. I need to learn how to do that.
Thank you to you, Dr. Carter. You did a great job today.
Yes.
Thank you.
Thank you so much.
Thank you.
We
Thank you
also
so
want
much.
to thank our director and associate director, Dr. Ali Imdad and Dr. Sanjay Bapna. And we definitely want to thank our friends at Cross River, Ms. Mariam Wallach and team.
Absolutely.
Awesome. Thank you, Morgan State. Thank you.
Thanks for having us.
Thank you.
Have a great day.
Thank you. Bye-bye.
Bye-bye.